It is November 2025 and it feels like 2018 because that is around the price level that Target is at. Let me repeat that. Target is at the price level in 2025 as where it was in 2018. How did we get here? Now, some of this I've talked about years ago. I actually did a video about Target back in 2022 and I said, hey, this stock is trash, and unless they do something different, it's gonna fall off the rails. Here we are 3 years later and it has done pretty much that. But the most important thing is this: what can we learn as investors and how can we at least try to avoid these types of mistakes moving forward? Let's go ahead and break it down. I like to start off with some context here. In 2017, the stock was as low as about $56. By 2021, it was almost $250 per share. From 2018, about $56, all the way up to $250 a share by 2021. That 4-year stretch was crazy. Target was the stock to have, and it also paid a good and solid dividend. But then, as you may know, once we hit 2021 up until now, there has been a series of protests and missteps with Target, and they have not, obviously, recovered to this point. Here's the first thing. They didn't adapt. There were several things that this company so far did not adapt to and have not adapted to. The first one is probably not one that you're currently thinking about, and that's inflation. They never adapted to the inflation problem. Remember, the first thing is they were taking off and doing well as inflation was low. When people had money, had, I was going to say dividend checks, but had COVID checks and all these things, they were fine up until people started to go outside in 2021, moving into 2022, and that's when things really started to fall off. For example, let's take me, right? I had 2 kids. I was not paying daycare for neither one of them and didn't have to pay student loans either. I had a lot of extra cash. Now, I was using that to invest, right? Using that to pay off student loans and doing responsible things with my money. But also, I would splurge on Target. We all know that Target was a bit more elevated, a lot more elevated rather, than a Walmart and some other, similar types of stores. Well, when inflation took off, especially when it hit 9% in 2022, a lot of shoppers did what? And we talked about this in 2022. They traded down. They went to a Walmart. They definitely went to an Amazon. And some places, they went to Dollar General and Dollar Tree. It was not Target. Target didn't adjust those prices. They didn't become any sort of discount store and didn't do anything to truly adjust. They stayed a luxury brand, I'm putting that in quotations, but tried to be that luxury brand, and it didn't work. And then you go into the streaming piece of this. Everybody else, when I say everybody else, I'm really talking about every other company. Walmart joined up with Paramount. We know Amazon already has a streaming partner. They are their own streaming partner, but they also bought MGM to have even more of a catalog. And they all had some subscription service where you could get some variation of 2-day shipping. Target sort of had a shipping option where you could get something quicker. Most people can't name it. It's not doing all that well, and they had no extra benefit of, hey, I'm going to pay for Target Plus or whatever their program is. They were sleeping. What are they doing around that? And again, as an added benefit in a world where there's so many streaming platforms and everybody's looking to cut certain things around these programs, when Disney Plus is increasing, YouTube TV is increasing, you want to get something where you're going to spend money and get a discount and get a benefit in some cases. For example, Instacart has, if you pay for their premium option, you get Peacock as a add-on to it that's free if you sign up for it. Target's not offering me anything. Your shipping option isn't good. It's also the most expensive of the other items, and I also don't get a streaming option. What am I here for, right? They didn't evolve as everybody else did to keep up with their competition. And again, they're also the most expensive of those options. And the other piece of this, talking about not evolving, they also did not take a stance. Conservative people don't like them for what they did around Pride Month and all the products they had then. The Black community didn't like them for what they have just done around DEI policies and things like that. Liberals don't like them for how they looked like they capitulated to conservatives. Like, nobody in either group likes Target and has protested currently or at some point in time protested them and their sales have dropped. Nobody likes Target and is in some sort of camp that has protested Target or is currently protesting Target. You have to take some stance somewhere and say, look, this is what we stand for as a company. This is what we're going to do. That is how you get customers. That is how you get brand loyalty as an individual, right? Or as a multinational corporation. You have to take a stand and say, look, this is what we are going to do. Because saying who you are not and what you're not going to do also attracts certain types of people and certain types of customers. When you come to this channel, you know I'm not doing get rich quick schemes. I'm not going to be showing you a private jet in the background. I'm not going to be doing videos in my garage of a Lamborghini. That's just not my style, and that's not how we roll here, right? That if that's you, this channel ain't for you, right? We talk about long-term wealth, real data and information, and I like to keep things relatable in a way that makes sense. And if that ain't you, I'm sorry. But the fact that they keep wavering back and forth trying to please everybody means that you end up pleasing nobody, and their sales have shown that. And for investors, the stock price has shown that. Now, as investors, what is the thing that we need to learn from this entire ordeal? One, you need to not be married to stocks and especially to brands. There's so many people that say, hey, I just love Target as a brand. Or they used to. I think most people kind of realize this at this point in time, but because it made me so much money in 2017, 2018, 2019, I'm going to hold on to it even longer. Or Starbucks, for an example. Or certain things, because they shop there, because it made them money in the past, they just hold on to it and will not let it go. This is why I have the rules that I have, both the 5% rule, where I try not to hold any one asset other than index funds, more than 5% of my overall portfolio. That's number one. In case I'm wrong, hey, it's not going to ruin everything. But also, number two, that 6-month rule is there for a reason. Because from 2021 to now, I would have had so many opportunities to stop, honestly look back and say, hey, this is not working. Right? June 2021, as the stock was falling. December 2021. June 2022, every June and December, right? I keep looking. I had so many opportunities, and we did sell. Because I owned Target at one point. We sold. I said, hey, again, did a video. There's always a video, right? Did a video about it, and I said, this is not going the right way. Target's not evolving. This is not working, and it has not changed. They also changed CEOs earlier this year because things were not going well. Number two around this is the perfect case of context that I always tell people about, and I don't know if I explain it well enough. Maybe it's just me listening to me when I edit these videos, but I always talk about how important context is around the time that you invest in a stock and how that time period can change. Whether something was good then may not be good now. At the time that Target was good, 2017, 2018, it was a different time. I mean, my son was born in 2018, so when Target was first taking off, either I was not a parent or just becoming a parent for the first time. I got 2 kids now, right? I was in New York. Now I'm in North Carolina. Like, I'm a whole different person now than what I was today, right? And when it comes to Target is in a completely different market today than what it was back then. Walmart wasn't doing a 2-day shipping thing. Amazon didn't have their streaming service in the way that they do today, right? There are people sitting at home watching TV on Amazon the same way they do Netflix in 2025, and then order their groceries. Like Whole Foods and Amazon, that is still a thing, right? The environment is completely different. What has Target done to adjust to that environment? They ain't done much of nothing. Right? In a space where tariffs are high, prices are high, layoffs are happening, and everybody's adjusting to still having high prices from that era. Everything else has changed, but then prices is still high. What has Target done to adjust? Walmart has kept prices lower than everybody else. We know what Amazon is about. Target hasn't done anything. You, as a business owner, which you would own these businesses as you buy these stocks, but you have to sit down and say, all right, look, these are the cases. You've got to look at your portfolio and say, look, as I'm buying this, what is the reality of the situation? Do I want to buy this or not? Beyond just looking at a chart. Right now, we talk about the fact that the stock is down negative 10% in the last 6 months and negative 28% of last year. So it tells you it's probably trash. But also looking at the context around like, hey, I'm not sure if this is gonna work because of what made it work last time. That's why I say so many times you need to know the why something is happening so you can determine whether or not you think it's going to work over the next X amount of time. These are the things that you must absolutely pay attention to and learn from the train wreck that is Target right now. You want to learn more about the stock market and everything in between when it comes to money, you would check out these videos right here.